So in earnings season, everyone's always like, it's so hard to judge risk. It's so hard to find the ones that are going to work. And I do trade about 4 or 5 of them with options. So yesterday, when we were preparing for Netflix, I was thinking about the ingredients of Netflix. Okay, you have a huge channel. To me, a lot of people have been watching it. I watched the Queen's Gambit. That was fantastic. I watched that Brickerton whatever show with my wife, and there's all the other ones. So you put a little bit of it together, and all of a sudden you had Netflix, okay, which was in literally a channel for how long? Since July. So some people are like, Red Dog, how do you go about your strategy for it? How do you figure out where you want to do your call spread? So you look at this here, this is one huge channel. And although there's been lots of ways to maneuver the channel, and you see all these little lines and stuff, that's what I've been maneuvering and trading and trying to make money from it. And finally, I'm like, hey, let's take a look here. All of a sudden, this is what we have. So institutions during this entire time, they're the ones picking out, accumulating the stock. Everybody was like, Netflix is done because, COVID cases are going to peak and no one's going to be watching as much. They borrowed from next quarter. That's what they said 2 quarters ago when it didn't work. So I'm like, you know what? Nobody really likes Netflix. So when nobody really likes Netflix, Red Dog likes Netflix, especially if I do it in a way that's calculated, especially when I see a big channel like this. So I'm like, look, here's 545, and here is the pivot resistance area of 575. So I'm not really worried about missing this little spot right here because it's just, how many times we catch those spots. I'm worried about is if it has a big move and we could, not make big money with a big gap up. So I bought the 545 by 575, spent $3 to make $27. I don't really put more than 3 to 5 grand in an option play for earnings because 8 out of 10 times you usually lose it, especially if it's a lotto play. So I'm like, I'll risk 3 grand to make 27. So anyway, news came out. Some people traded it after hours. After hours, you could have bought it through this pivot. You could have bought it through that pivot. And then all of a sudden, boom, okay, you had a huge move. So intraday, let's move this out of the way because I want to use this as a little bit of a lesson. I said, what do we know? We know 556. That was your 30-minute low, your 5-minute low. I said, let it put a low in, let it come off that low, and you could be long versus that low and just walk away from your desk. And if you did that, it went as high as 593. So you did pretty well. Or you could have waited for a range to develop. So I'm not even talking about the call spread. Okay, what did I do on the call spread? I managed half of it, okay, in the first half an hour, and then I still have half of it on, and I needed to close above 575, and then that'll net me 27 points on, the leftover 5 contracts, which is $13,000 besides before then. Anyway, a lot more people made a lot more money than I did because they put more money at work. I didn't because I do a lot of these. So anyway, so this is what we knew, huge gap. Okay, this was the high of the morning. So guys like, Red Dog, how do you day trade this? I don't do options. I just want to play the stock post earnings. I'm like, well, again, you have a 5 or 15-minute low to trade against because that's the new pivot reference. And then you have a high. If it gets above that high and stays above that high, you get some momentum. So you go to just say, your one-day chart. Let's make it really big. Okay, and let's go to, okay. So here is your one-day range. Okay, so this low at 933. So you didn't even have, like, there's really no pain. Once it puts a low in a 933, right, like right here, okay, this right now is the low to trade against. It went up, hit, went through 575. I actually remember I bought a little bit because 575 was the breakout, but it was just too fast. Came back in, I bought more, I cost averaged my way around it. But the real way to trade this would say, hey, okay, this low here is 556. Okay, 556 is the low that was just put in post earnings. That's all you knew. Okay, and then it had a nice consolidation going sideways. So what do? You draw a line at the high of the move. Okay, this high here was what? 577. Okay, so right around, I believe, 11:30, as a technician, I say, what do you know and what, how do you respond? So right around here, I'm like, okay, this is what you could do. You could be long verse 556 in the base. Okay, let's get rid of this for now. And if it gets above and stays above 577, there's nothing to your left. You can have a breakout move on a day trading spectrum. So I was in the call spread, and I'm still in the call spread, but I'm like, how do I want to make money from this, you know? So anyway, so right around, this was 11:15, I think that's when I posted the chart. I'm like, you could be long just a tier 1. So let's talk about tiers, because some people are asking about tiers. So we're going to really go into this. You could say, hey, I'm going to be long 200 shares with my risk at 556. So if you're here at 573, at 556, you're risking about 15 points. That's a little hard. It's for someone that's but when it's up that much, you have to risk that much. So you're risking 15 to 17 points. Okay, so you're in tier 1 in the base, not touching it unless it breaks 556, and then you're adding to it for the breakout move. So to me, I bought a little bit, okay, and then right when it broke above 557, okay, right before I actually stayed. So it's, first of all, the base is still going along. So you could have been overtrading and overtrading and overtrading. Thank goodness I wasn't overtrading it. I was managing so many other positions. Then all of a sudden, still going and going and going. Now it's getting a little closer. It's getting me more interested. I'm like, ooh, look at this. It's getting closer to 577, and it's getting midday, and people have had all day to get out of the stock if they're in it, and people have had all day to place themselves versus 556. So it's still going and going and going. Now I'm like, damn it, I was supposed to take a Peloton class at 12:15. What am I going to do here? And I'm watching the inauguration. We're going sideways, sideways, sideways. And then finally, you take a look at it, and it wound up clearing this 577, stayed above it, and wound up making a move all the way to 593. So look at that move. So if you look at it, taking a step back, I actually could have bought it here too. We'll kind of clear this little pennant. So you could have been buying it once versus 556, and then adding to it when it broke above 577, which is right here, and then it hit a high of 593. Or you could say, I'm just going to wait for it to break above, which it did here pretty cleanly, and stayed above, and then went as high as 593. So 593, that's 16 points in Netflix. 16 points in Netflix could make you a heck of a lot of money. Just as the day trading, if you didn't do the options, or if you did the options and you kind of said, okay, I'm not going to put the options out of my head, I'm just going to day trade as if I didn't own the options and make 700% or so on it. So that is how I think about it. So now we have these as points of reference. I don't care who was on the TV set, even me. Nobody knew what would happen this year. So when you don't know what's going to happen, what do? You fall back on your process. What's my process? I use moving averages. What do moving averages tell me? Moving averages tell me the active strength of the market. Whether there's momentum, whether we're weak, whether we're really weak, whether we're like, we better friggin' avoid. Okay, that is why we use moving averages, because when all else fails and you have no idea what's next, the market will tell you what's next, not the talking heads on TV, not even me. The technicals will tell you.